Liquidity inducement. What does liquidity mean? Hello everyone, how are we doing? I know it's been months from my last upload in this amazing series, Tsc Fundamentals, but hey, here is a video and I'm sure you're gonna like it. Liquidity is a very crucial concept in the smart money space, and I believe every trader should be well informed about liquidity inducement. Trading without paying attention to liquidity will be very detrimental to your trading. Now this liquidity, what does it mean? When they say liquid, it means something that has money in it. As you might have heard, the foreign exchange market is the most liquid financial market. It means it's the financial market with the most money you get. So liquidity levels is an established level in the market where stops and orders can be resting, leaving these areas for smart money. Smart money is the person or is the entity with the most money in the market. It's the type of financial institution when they buy or sell in a particular asset, it will definitely be seen, which means it will affect that particular instrument. Be it stocks, crypto, currency market, it might be anything at all. Here in the FX Spiders, we call it the composite operator because we believe it is just a person behind the screen. So liquidity is in form of orders, or liquidity means orders in form of buy, sell, stop loss, buy limit, and buy stops and sell stops, etc. The market moves with the intent of liquidity inducement and liquidity grab. Now listen to this. Liquidity lies in every swing high and every swing low on every time frame in any market. Let me give you an example of what liquidity means. Let's say JP Morgan wants to buy an asset worth $10 million and the stock doesn't have that amount at that time. The transaction cannot occur. For a trade transaction, both buyers and sellers need to be available with the exact value of order before a transaction can occur. If smart money wants to buy Euro USD worth $100 million and no enough liquidity to match or fill their orders, smart money will start to induce liquidity that will instigate retail buying and dump smart money sales just so they could be enough sellers that they could buy from. I hope I'm making sense. How would you spot liquidity on the chart? Liquidity actually comes in so many forms. We've got common liquidity inducement and advanced liquidity inducement. And what are the common liquidity inducement that are already everywhere, pretty much everywhere in the smart money space? It's simple. We've got the equal highs and equal lows, and then the trendline liquidities. What are equal highs and equal lows? In the retail space, we know of support and resistance. In the smart money space, support and resistance are actually liquidity. Instead of looking for trade around that area, you should look to target areas like that. Same with trendline liquidity, as you can see. It means orders have been stored on each of those swing highs, and at some point, smart money needs to go up there or down there to grab those liquidity and fill those orders. Liquidity is also referred to money in an obvious state. Do not focus or target liquidity against the trend until after a stock breaker structure. What they are trying to say is, for instance, this is a trend line. Yeah, as clear as it is, price is trending downwards. It is very clear. You're targeting, let's say there's an equal high here, line here. Let's say this was sketched out to the here a little bit, and then finally drops for argument's sake. And now we've got liquidity here, for instance, and all that's in your head. Price is trending downwards, is very clear, but you're targeting here as your liquidity. You're trying to catch the bottom, trying to buy just to target this level. It doesn't work like that. It has to move with the trend. That's how liquidity works. Just don't come and see liquidity anywhere in the market and think you just magically want the market to get to that level. It doesn't work like that. Yeah. Advanced liquidity is simply swing highs, swing lows. As I read a statement earlier in this episode, I said liquidity lies in every swing high and every swing low on every time frame in any market. So that's exactly what it is here. So there's liquidity in every swing high. So since the market is trending downwards, in a downtrend, the reasonable liquidity, the first target liquidity should always be your lower low. The lower low is a liquidity. The lower low is a liquidity. And in an uptrend, a higher high is the liquidity. It's that simple. It's clear. This swings liquidity, and of which a lot of smart money traders neglect. They always focus on equal highs, equal lows, etc. But swing liquidity is one of the most crucial liquidity. It's what myself I use most of the time, and I call it inducement. That is the main inducement. Because so many traders are lost. They put all their energy into equal highs, equal lows. And let me give you an example with NAS 100. This is a breaker structure on this time frame. For argument's sake, I'm using the swing. So that is a breaker structure. Then after BUS, we expect pullback, and before pullback, a change of character. For this trend to remain intact, the price must not come below the protected swing. So anytime price pullbacks, your target is going to be the higher high. Then that is liquidity. That is liquidity. And after a BOS again, you expect a pullback. And before pullback change of whatsoever, price decide to pull back. And your target should be what? The high. And that is the liquidity. That's swing high liquidity. That's swing liquidity. You keep following inducement like that. This is another liquidity until the trend changes and you start to look at lower lows for liquidity. And it's taken, and all these levels are liquidity. This is where trend line liquidity comes in. This is a trend line. And price went up to grab all the orders within this trend line liquidity after taking all this liquidity here. Liquidity like so. And as price moves away, it also created this liquidity. That is what swing liquidity is. Then how do I use swing liquidity, or how do I use liquidity inducement? I'm gonna show you a trade I took yesterday, and I'll show you how I use inducement. So initially I saw this level of liquidity, more of a resistance. Well, let me break it down for you. Price was kind of resisting from this level, and I saw this massive rejection. But this reaction did not actually show anything. There was not a break of structure or change of character in any way on this time frame. So I know this was just a trap, and the market maker will eventually come and take them orders. Simple. As I have that in the place, I just waited for an M15 break of structure, which is a 4-hour change of character, and this was where it perfectly happened. Price move coming up to this level. I had this beautiful zone, but I didn't sell from the zone. I like to use the extreme, reacted a little bit, force people to buy early, and price will come to fill our orders. That is liquidity. As you can see, was no fancy equal highs or equal lows. Below this level there, it's kind of an internal swing low, and that's my liquidity. Now I'll show you another example on the Euro USD, I guess, or something like that. Yeah. Yesterday, same old thing. I wanted to buy from the extreme level, but the price never got to the extreme. This was the extreme level, and so many buyers would trap and be tempted to buy here. But I want to see price manipulating these people, liquidating them, taking them out, and coming for our orders. But however, that didn't happen. It just liquidated the early buyers, and then that's how trading is. If you notice here, this is a very nice place. The sellers would be tempted to sell. But this is the extreme, but it has already been mitigated. So we're going to use the next one and sell here. And let me see if I can give you more example. So that's how liquidity is. When my trade is in place, then I bring inducement into it. Understand? It gives me reason. It gives me where to target at times. So as you can see on this beautiful NAS 100 trade, I was targeting the highs. This liquidity pool where so many orders were stacked. People were trying to sell while the market is heavily bullish, like so. So I guess this is where I'll be running off for today. Thank you for listening. See you next time, guys.